Good morning, everyone. It is Wednesday, May the 4th. Be with you today as we get going here on FOMC Day. Finally, I feel like we've been talking about this forever, and especially this time because we know that those rate hikes are going to be coming. The 50 basis points is already baked in. Now, the question is, does he raise more? I doubt it. What does he say about the next rates? How many rates does he see? What is he basing it on? Is he hawkish? Is he dovish? Is he neutral? Right? All of these things are going to take take their toll on the market one way or the other, and that's what we have to pay attention to. So, does he talk about recession? Okay, I can tell you, I don't know how many videos or analysts that say, yep, we're going to recession, we're going to recession, we're going to recession, and they compare it to other times that are very, very different. Just as with the pandemic low, that pandemic drop, you can't really place a good historical time in the market like there is now. And here's why. This is what I'm going to tell you. Our consumer spending is still incredibly high. Our wage growth continues to grow. Yes, we do have very high inflation due to supply shortages. And our job market, there are more jobs available than people unemployed. You put all of that in a nice, neat little package, and I find it very hard to believe that we are running into a recession. Can we go into a recession? Sure. And would too many rate hikes too quickly push us toward that? Absolutely. Are we off market highs? Oh my goodness, yes. Should we have been at those highs to begin with? Maybe not. Maybe a little exuberance. Maybe a little getting ahead of our skis. None of that matters because whatever we did to get here, we're here now. So it doesn't matter. We have to deal with what moves from right this moment forward. And Jay Powell, my guess is that he's looking at this and he is going to come out and not want to ruffle too many feathers. That is my guess. I think he will talk about the possibility or the need for more rate hikes coming up, but testing the waters, seeing the reaction, and also constantly keeping an eye on what is truly affecting our economy. It's not because we have a pumped up subprime mortgage issue, right? We have a war going on in Ukraine. We have supply chains that still have not recovered from 2 years ago now. Can you believe this? 2 years. Remember, it was supposed to be like 2 weeks or a month, right? But anyway, Shanghai, or not just Shanghai, but China, areas constantly closing down, which does what? Oh, that's right. It causes supply chain issues. And our labor market, as robust as it is, there are an amazing amount of jobs out there. And just today in the ADP report, we saw that small businesses in particular are losing jobs because they can't keep up with the wage growth, right? We're getting paid. I was watching CNBC this morning and they thought $13 an hour for a starter to make pizzas was too cheap. That wasn't enough. Well, I don't know. I don't know when we got so full of ourselves. But if you're 16 and going out for your first job and think that you are worth more, I hate to say this, and I'll probably get some hate mail for it, but chances are later in life you're setting yourself up for a failure because everybody has to start somewhere. You don't get birth and then all of a sudden run a marathon the next day. It's a process, and we all have stuff to learn. All right, so all of this, we have the volatility yesterday that we saw. Here's the S&P for this morning, right? We hit that low. We've been talking about these lows. When we flip it over, you see we're a bit green today. Great earnings overnight. So here's, right, we've used the fib lines. We had a trend line in here, which I've removed yesterday because we did go through it. Yesterday we put in a higher low, a higher high, looking for continuation on that. When we flip back over to the ES, let's try that one more time. To the ES, we do see that was on a bit lighter volume yesterday. A bigger move on lighter volume Waiting, I think, again, for the Fed. We've talked about this all week. Friday, we have the monthly labor report. That can certainly move things. The ADP report today, which is the private non-farm payrolls, was very underwhelming. Again, the largest sector loss was the small business employees, which is under 50, and not really a huge number in those big companies, which is 500 or more. We also have constant swirling around of potential hacks and the constant threat that we are under trying to navigate all of this with China and with Russia and Ukraine. We're just kind of in a mess. With the rates going up, we're seeing housing starting to really slow down. And although this last week on a slight dip in interest rates, it was very slight. There was a bunch of refis that were filed for. For the most part, we're definitely on a slowdown. We are coming up to the season where people are actually putting their houses on the market, so we'll get more inventory. But overall, we've definitely come into a slowdown even on the housing market. So what does this all bake into? Well, we're starting to travel. Marriott, ABNB, you're going to look at all of if you look at these names today, they are up big simply on travel and getting out there. These names are seeing great numbers. They have pricing power, all things that go into making a great report and their guidance going forward. But makes sense, right? Because how could they get much worse? I mean, I hate to say it, but really. All right. AMD reported, giving a lift here to the Q sector. Starbucks reported as well yesterday. Always a fun debate as to whether Starbucks is good or bad. The coffee, that is. I'm a huge Starbucks fan, and it is, initially looked to not be so great, and it turned itself around. They had their guidance, and they are up over the 20 here this morning, so pay attention to Starbucks. So a lot of names really just kind of giving the market an overall lift. But again, going into FOMC, be very cautious. Not setting up any trades until after FOMC. But where am I going to lean into? Looking at that travel sector. I really like the travel sector. And with that, that would include airlines. So we're going to keep an eye on all of these. You can see they've been really chopping around. Love DAL and UAL. Look at these little boxes they're in. Really want to see it come out of a box. Or particularly in UAL, draw those trend lines. Draw those trend lines. There you go. We'd want to come up over that. Actually, it's a pretty decent little wedge right there. There we go. All right, draw those trend lines. Play the break of the trend line. And like I said, the Q's actually getting a nice little bump here this morning on as we push our way through earnings. We're a little red right now, but overall, there's been a lot of decent move in the Q's here, so keep an eye on that. Bitcoin, so a lot of debate about Bitcoin, continuing to just chop, which looks an awful lot like our VIX. So we talk about volatility and how we use it. Volatility is great, especially for day trades, but not when it's just kind of doing this, right? Up, down, up a little bit, oh, down a little bit. Wait, we're going to make a big run. No, we're going to make a big fall. Chop, right? Really hard to trade. Trades are having a very difficult time following through, so just keep that in mind. Stay in the day trade if you don't have to. Actually, you don't have to trade. I always say if you don't have to trade, don't. Yeah, you don't have to trade. You may want to trade, but you don't have to trade. Don't force a trade. Watch for the FOMC to get through. Watch for the action, the reaction, the counteraction. I know, it is crazy. Just a little more volatility. And then keep in mind that on Friday we do have the earnings report. Now, a reminder, on Friday I will be out all day because I will be traveling down to see my mommy for Mother's Day. All right, everyone. I hope you have a fantastic May the 4th be with you. Right? Happened to fall on hump day of all days. Have a great day. If you have any questions, reach out. Heather C. at GivingTreeTrading.com.